Alrighty, hello, welcome. Great to have you here. This is going to be exciting because this is my book launch. How cool, right? Uh, Hopefully you can hear me. Let's just get some things going here. Open up the chat, and just as we get started, open up the chat and just pop in there where you're from. I am coming to you live from Brisbane, Australia. So pop in there from your chat. Okay, we've got Johnny from Sweden. Okay, cool. From Cincinnati. Awesome. How do I get that out of there? I need to get that. There we go. That's what I want. All right. We are go. Hopefully you can hear me. Get that a bit bigger. All right. Sweden, Massachusetts. Joe, it's good to see you here. Cool. Austin, Texas. Hey, Scott. Saskatchewan, Canada. All right. Sweden, Ballarat, Victoria. I got some Aussies here. Who put a note there? Jonas, I need this hype for 5:30 a.m. in South Australia. Thank you. No worries. All right, we've got Raleigh, North Carolina. We are everywhere. Oslo, Norway. Wow, we are global today. Darren, good to see you here from Scottsdale. Rhode Island, Chris, good to see you here. All right, team. Now, keep the chat open. Keep the chat open because we are going to be communicating through the chat. Team, the book is here. This is live. That is a real book. Yeah, I'll be back. I'm here, David. What happened there? I think when I hit the book, got a bit excited. I knocked out my mouse or something. Mouse is back. All right. I want you to use the chat for questions. The book broke the internet. Yeah, thanks, Scott. Exactly. It's an exciting day. All right. Wow. Yeah, drop the book on the cable. Exactly. I froze. Thank you, Philomena. All right, team, let's get into it. Get out of that and let's talk about this book. Let's talk about what you're going to get out of today's session. First of all, let's talk about the book. It is 62,500 words. It's a monster. It is 232 pages. Within the book, you've got 5 free tools, giveaways, right? I wrote this book purposely to give you a bunch of content. We can't help everyone at all. We can only help a small few every single year with our coaching program, but I want this book to be timeless. This is the most significant piece of content I have and will write this decade. The Wealthy Accountant book came out in 2020. This one is 10 times better than that. There's tools in there. There's case studies, 15 case studies, 150 plus strategies. And would you believe it? It took me 31 years to write it. Well, not really. It took me this year to write it. But working with you, the accounting profession, for 31 years, and everything comes to this book. It is a timeless book. So there is no mention of artificial intelligence as the big thing, right? Because it is here, it's done. This is about principles. By the way, very proud of the fact, team, very proud, no AI involved in writing said book. Just my little pesky fingers on my trusty laptop, pegging away every single word. So you lost a bet to Andrew. There you go, Joe, because he said I wrote an AI. Yeah, I knew it, and I did not, purposely. So much rubbish is coming out with AI at the moment. It'll get better. But the reason I wrote it not with AI is because when you meet me, or if you've met me, I want you to hear me through the book. I don't want a computer to talk to you, right? And by the way, I am doing an audio book in October. We're going to record an audio book. Right now it's an ebook. There's going to be a physical copy. I just got a couple yesterday. So you'll be able to get into that. Books have been pretty good. Thank you, Michael. Well, this is book number 5 in 15 years. And this one, I assure you, will be the best one. And I've written Timeless. How do I get this book? JC, you're going to get a copy as being part of this webinar. And then you can buy, are you the voice? John, yes, I'm going to be the voice, right? You can buy a copy of the book later on. But initially, we wanted to get this out, so we've got an ebook first of all. So let's take you on a journey about this book. And the journey is what you will get out of it if you implement what's in it, right? So that's the big if. Our coaching firms that we work with, like John, for example, John Drawdy, we hold them accountable and we push, but this is a self-help book, right? So if you implement every single strategy in this book, this will happen to you. First of all, the journey you'll go on. You'll start your life as a practice owner. That's maybe where you're at the moment. This is where you're grinding out, working way too much in it. And the money's okay, but you don't have a huge amount of time, right? You start implementing things in the book, right? And you say, you know what? I need to spend more time working on my business than in my business, and I'm going to switch to be a business owner. And the action of a business owner is that you spend more time working on it than in it, right? So working in it is basically what the book is not about. That's where you may start. The book is about you getting profit and time. And the subtitle, An Accountant's Guide to Having It All. You can have it all. And if you decide to really take it to the next level, then this is what we call investor level. And this is where you get yourself out of every single job and you become an owner, but not an operator, and you create generational wealth out of what you implement in this book, if you choose to do that. I know John Drawdy's online, is doing that as well. So it's Kevin Batson, he's online as well. Awesome. You can choose. So the book's about content you need to implement, as well as progress of how your business looks, also the progress of your revenue, your profit, and your time. So this is a real study of the progress of the firms that we coach over a period of years. The average starting mark is $2.3 million. Same firms, as they stick in with this for 1 year, plus 23%, 2 years plus 34, and so on and so forth. If they stick around for 5 or 6 years, we've got over double in revenue. In fact, a 14.4% average, that should say revenue, that's not profit, average revenue, that's profit increase, right? That is revenue, right? I've stuffed that one up completely with the slide, right? That is revenue. This is profit, right? I need to fix that slide. Lucky you'll get a slide that works when you get the slide deck. You will get the slide deck, by the way. So this is profit. Average profit is 25.7% per year. So revenue is very much vanity. Profit is sanity. But what's king? Time is king. Time decrease. Firms that we start coaching are averaging 2,202 hours working in their business when we meet them. Then with the strategies in the book and our coaching work, we get them down dramatically, down to around 400 or 500 hours working in their business over a 5-6 year period. And you'll notice that's an average of 22.4% reduction. You'll notice in here that there's a blip in year 3 where the time working in the business goes slightly up. And the reason for that is because in year 3, if we go back to profit, not revenue, year 3, we're at 814,000 average profit before partner salaries. And life gets pretty good. So what they do is they take the foot off the gas a little bit and consequently don't keep, then they realize, hey, we need to keep pushing this and push. So your choice. You'll get a copy of the book. Everyone will. Read it, devour it. There's free tools to help you out as well. There's a website in the book where you get the free tools. I'll give you some samples of a couple of those free tools today. But then you implement and changes happen. That's pretty cool. Now, if you want to fast track this, if you really want to increase profit, decrease time, then, and if you're over $1 million in revenue now, and if you're 1 to 5 aligned partners and you're ambitious, then, and you're coachable, then maybe we can help, right? Let's see if we can help. You've got a QR code there that you can book a meeting. I will put that QR code in there, which is there. Oh, no, that's Zoom login. We don't want that. Right, what are we going to Zoom login for? We want this one. Boom. Awesome, John. Profits over 70% since starting with you about 2 years ago. Yeah, thank you, John. And more importantly, John, your time is way down as well. So team, if you want to fast track this and review that criteria, click on the QR code throughout this session and book a meeting and we'll have a discussion. Let's get into the book. Let's go chapter by chapter with the highlights reel. Chapter 1. It's all about you. Unless you have read some of my earlier work, then this session, thank you, John, less than 1,000 hours last year, total time, 0 chargeable. John, we love you. Awesome. Unless you read some of my very early work, you have never seen this piece before. Let's start with you. Let's start with you and realize the more you work on you, the better your business will be. The more you work on you. What do I mean by that? Well, before we get into tactics and strategies, there's tons of those, I want to talk about you and how you operate, right? This is based on deep research looking at the most successful accounting firms I've ever met or coached and the most successful business people, entrepreneurs I've ever met or worked with. You'll need a piece of paper for this one. Grab a piece of paper and a pen because you are going to draw a spider wheel. Little spider wheel here, 8 points, so draw 4 lines, 1, 2, 3, 4, yep. 10 at the outer points, and you're going to score yourselves right up front. Little scoring system down here, poor, reasonable, good, very good, outstanding. And we're going to have 8 things about you that you can score yourself on, and then we'll talk about what you need to do with this. So just be honest, write it wherever it is. First of all, the people I've met in 31 years working with accounting firms, in 40-something years being an entrepreneur, including billionaires, including 100aires and everything else, right? When they understand their core purpose for being here, Mark Twain said it well, right? Mark Twain said the 2 most important days of your life, the day you were born and then the day you realized why. What is your core purpose in life? For me, I discovered my core purpose in 2006 in Bali at an entrepreneurs conference. My core purpose is influencing lives. I get jazzed out of influencing lives. I'm here to influence you. I'm not here to change you. You're here to change you. I'm here to influence you. That's why I was put on this planet, to influence lives. And I didn't even know it at the time. I'd been doing that for a long, long time. So I do that in many, many different ways, influencing lives. What is your core purpose? If you don't understand your core purpose, rate it really low, like 1 or a 0. If you do, then rate it high. Next one, your goals, your bucket list. Would you believe, for the first time ever, I have listed, what are we up to? Get the book from here, 165 bucket list items of what I want to achieve. You've got them all in the book, right? What drives you? For me, what drives me is my core purpose and my list of lifetime goals I want to knock off to have a life well lived. In fact, number 165 is write another book called A Life Well Lived. This will probably be my last business book for accountants, but I am going to write another one. Here, an echo on the call, Steve. Not too sure why that is. If anyone else has got an echo, it might be your side, Stephen. Next one. So mark that. If you've got a documented bucket list, thanks, Stephen. If you've got a documented bucket list, then mark it high. If not, mark it low. You'll see where this is going. Courage. Hey, Darren, good to see you, man. Hey, Darren Boomer came to see me the other week. And his wife got a hole-in-one on my golf course at home here. Not on the thing yet, Darren, but it will be. We need to get 3 at a time. Courage. How courageous are you? Why? You're a scaredy cat. You're a scaredy cat, right? Courage. Do you step out of your comfort zone all the time? The more courageous you are, the more, in business, the more courageous you are, the more you will try things, some don't work, right? And the more progress you'll get. Mark that one, where you think you are. Next one, thirst for learning. I was blessed in 1987. Just saying those words makes me sound old. I'm not that old. I'm only 55, right? 56th birthday coming up in 2 weeks, 28th of August. Remember that. Thirst for learning. Since 1987, correct? I started my journey on personal and business development. I've got an entire library. Darren's been here. It's in my clubhouse. Gretchen, birthday too, awesome. It's also Rich and Pajek with the same day. Library of 500 plus books. I'm always reading, always listening to podcasts, always learning, whether it be health things or business things or whatever. Thirst for learning. Not technical learning. I'm talking about you learning, business learning, personal learning. 0 to 10, make a score. Next one, jump on a plane. It's a euphemism. What I mean by that is Someone has done what you want to do. Seek them out. Call them up. Visit them. Jump on a plane. Go and find who it is you want to model after. As my buddy Jack Daly says, model the masters. Model the masters. By the way, all the quotes in the book are my quotes, but that's Jack's quote. Are you prepared to jump on a plane and go and find anywhere in the world to find the best, model the best? Self-belief. So mark that 1 to 10. Self-belief. My favorite Māori, New Zealand indigenous word is mana. Pronounced M-A-R-R-N-A, mana, roll the tongue, mana. What it means is presence, self-belief. Where are you at with believing in you? If you believe in you more than other people, you'll get more success. Self-belief. Failing, 1 to 10. Failing a lot. Look, if you're going to try a lot of things, you're going to fail a lot of things, right? But if you don't try anything, you're not going to fail much. So are you failing? It's not a badge of honor to fail at everything, right? But you give things a try. You put yourself out on a limb. Not everything works. Fail a lot, 0 to 10. And lastly is discipline. Discipline. Do you have the discipline to start a meeting on time, bang on the second? Do you have the discipline to do what you say you're going to do? I was chatting with my dear friend Dan DePani, who's an ex-monk, just the other day, and he's actually coming to visit us in Denver. Those that are going to Denver for our coaching session, Dan DePani's arriving, right? Cool cat. He's got an awesome thing around discipline, which is finish what you begin. It's a discipline. Little things like make the bed every morning, wash up after you eat, finish what you begin. Do you have the discipline to do things properly? Now, 1 to 10, join the dots. Join the dots and see what you got. This will tell you a little story. Join the dots on your wheel. Now, what do we know about wheels, folks? Wheels, folks. What do we know about a wheel, folks? Well, a wheel is supposed to be round. Cool. Disciplines are 3. Everything else 6 to 9. A wheel is supposed to be round, team. The rounder your wheel, the faster you'll get from A to B. Now, you can add in a whole other list of traits in here, whatever it is, but if the traits, the business, the personal development traits are high, the wheel will go smoother and faster. Small wheel, all 2s and 3s. A lot of revolutions, a lot of spinning of the wheels. Big wheels, 8s, 9s, and 10s. Smooth ride. Pump up your tires, team. Pump up your tires. That's what chapter 1's all about you. All about goals, all about personal behavior. All right, let's talk about chapter 2. By the way, ask any questions, make any chats, make any notes along the way. Chapter 2, you've got a business here. Design it your way. Since it's your business, design it in a way that suits you. We're talking about business by design. Business by design goes like this, in a sequence. If you had your time over again, you had a blank sheet of paper, how would you redo it? A do-over, right? How would you redo it? Well, I would say, in my work, working with accountants all over the world, 18 countries now, our businesses have coached about 1,100. We've added about $2 billion in profit, right? Met 200,000 accountants because we've trained 200,000. I would say it starts with your business life. What do you want your business life to look like? Your working professional life. So here we say, okay, I'm only going to work this amount of time. I'm only going to do this sort of work. I'm not going to touch anything else. I'm only going to work with these type of clients. Your business life. My business life involves travel. So it's got to be front of plane wherever possible. It's got to be a driver at both ends. A car that picks me up that's equal or better than what I've got. Accommodation is equal or better than where I live, if it's available, of course. Business life. What are the rules around your business life? Because the rules become the rules. Start with you. It's your business partners. No one else's. Your team members, it's not their business. It's not your client's business. You're the one signing the checks, so to speak. You're the one paying the credit cards. You're the one with the insurance. They come after you. So let's design this business selfishly. Point one. Point two, your numbers. What do you want your numbers to look like? Got an email just yesterday from a firm we coached for 2 years up in Canada. Happy to report. We finished, the financial year was July 31st, finished with negative work in progress. Zero work in progress. Negative lockup. Not owed any money, right? Happy days. Profits of this, revenues that. What do you want your numbers to be? What do you want your revenue to be? What do you want your profit to be? What do you want your time to be, right? What do you want your wealth to be? Numbers, right? We're future pacing here because I've seen it all, right? I got a text yesterday, I've got a reply to it actually from Bob Govro up in Canada. And Bobby is a friend, coached him for a couple of years ago. Now more a friend. He's a sole practitioner doing $25 million in revenue. What numbers do you want? He's managing a $25 million business in Canada. Awesome. Number three, your services. What do you want your services to be? You decide what you deliver as a business. Don't lurch with what the government tells you must do. If you want to get into wealth management, do it. If you want to get into consulting, do it. If you don't want to get into consulting, don't. If you don't want business advisory, don't. If you just want to be a bookkeeping firm, do that. It's your business. Number four, your culture. The behavior of your people. Actually, we've got a session on people, so I'll skip that one, right? Behavior of your people. And lastly, right, designing it last. Who comes last in this equation? Your clients. You only work with this type of client. You don't accept all, right? You're very picky and choosy. Thank you, Darren. Cool. Awesome. Just read Darren's note, right? And John's note. And I'll keep talking about the book and the things in it. 1 through 5, clients come last. That is business by design. Most of you have got business by default, which is we start this accounting firm and clients, get some clients. We need some more people. We'll hire the sister-in-law, the brother-in-law, anyone, people, right? Oh, services, we've got to do this now, right? Yeah, our numbers suck and life isn't great. Business by design goes that way. Business by default goes that way. You decide. It's your business. Okay, so chapter 1 and chapter 2. 1 is about you. Chapter 2 is about thinking about the business before you start doing anything. Chapter 3 is about developing a plan. Most firms plan by perfumer. This is how they plan. They picked a figure out of most firms plan by perfumer. We're not doing that. Here's what most firms do, right? Even if they do start planning, this is how they typically do it, right? All right, we want this revenue. We need some people power, volume of people, times productive time or utilization, times an average charge rate, less write-offs, write-downs equals revenue. Lesser labor costs equals gross profit. Lesser overheads equals profit. This is the old business model for planning. We can't grow because we don't have enough people. How many times have you said that to yourself or heard that? Oh, we can't take any more clients on because we don't have enough people. Hang on a minute. We do an annual benchmark survey, and the number one thing that comes out every single year is efficiency and workflow, as in inefficient. Why don't you start with being more efficient, using tools to get more efficiency? You don't need as many people. Why don't you think other people elsewhere? Productive time. So you need people, right? Labor. Productive time. Forcing people to work longer hours. I want more billable hours out of you. It's crazy. Let's have less hours. Average charge rate. Okay, you are paid $100,000. You work 2,000 hours, we'll keep the math simple, therefore $50 an hour. we're going to charge you out at 150, maybe 200 a push. And the charge rate is determined by the salary and the salary multiple. That is crazy. Because as salaries go up, charge rates definitely go up, revenue definitely goes up, but profit does not. And then you have these stupid things called write-downs, right? Writing things off. This is a bad business model. It's typically a price and arrears business model. We're going to change that model and plan differently. Here is the new, better way to plan. Let's say we start with clients. We've got 385 existing clients. We're going to get some more clients, so we need lead generation. Let's say we generate 100 leads. We have a conversion rate of 35%. And so here we have new clients of 35. Gives us total clients of 420. We're going to unpack the numbers and drive the planning by the numbers. Total clients 420. Retention rate 90%. It's called monitoring that. Average transaction value 2750. They buy two things from us. So average fee per client here is 5,500. And so as we multiply that through, we get 2,079,000 in revenue. We're going to unpack different numbers, client-facing numbers, rather than internal numbers to work out our revenue. We're going to have some cost of goods sold and labor, say 950, gives us GP of 1.1, overheads of 429 for office, etc. Gives us a profit of $700,000. Two-partner firm, 350 apiece, sort of average, not great, not bad. This is a better business model. Now, what we're going to do with this is we are going to apply what's called Rob's rule of 38, 43. Here's how it works. Rob's rule 38, 43. Let's say we increase client numbers by just 5%. We increased retention rate by just 3%. We increased the price per project of just 10%, and we increased the number of projects per year by 20%. So the number of projects being 1 in 5 buy something additional from you, right? Price per project is a 10% lift in price. Real small stuff, right? This is compound interest for an accounting firm. There's your 38. That gives us a 43% increase in revenue. 43% increase in revenue. Let me show you this in action. So back to our 385 clients. There's a lot of math in this planning session, right? And once you get the book, you can work out your numbers, but I'm just giving you the highlights real here so you can get into it and start thinking about it. All right, so lead generation 100, but we're able to increase our conversion rate by 56% to give us 56 clients rather than 35. Total clients 441. Our 3% on retention rate, so we stopped losing them, now is 92.7. Average project value, so price per sale, is 3,025. And then 2.4 projects per client per year. That gives us $2.9 million in revenue, a $900,000 increase. Now, traditionally, with a $900,000 increase, you would need to hire about 5 or 6 people. We're not doing that. But I'm going to add $200,000 for extra labor, $200,000 for extra labor, because you're going to get more efficient, you won't need as many people, and you might get labor offshore as well. Thank you, team. No frozen here, Philomena. That's a you issue, right? Gives us gross profit of $1.8 million. We're going to increase our overheads. You might need to be with us for your coaching program, our coaching program, 100,000, 529, and that gives us profit of 1,288 million. Now, still 2 partners, and split that, we've got 600 each. So all we did is we had an increase of 5% in clients, a 3% improvement in retention, a 10% increase in price per project, and a 20% increase in projects per client. And that gave us 43% increase in revenue and an 84% increase in profit. Rob's rule of 38.43. What about Rob's rule of 76.212? Well, you're going to have to read the book for that one, right? That's in the book. I'm skipping that one. In the book. More excitement. It's in the book. Okay, chapter 4. It's all about building a team. When it comes to your people, the number one question with your current crop of team members is, would you enthusiastically rehire them? Think about that. You've got a bunch of people. Alexander, good to see you, man, from Sydney. A bunch of people who are on your current payroll, one by one. Would you enthusiastically rehire them? By the way, we are going for about another 45, 50 minutes. Somewhere between my time, 7:15 and 7:30. That'll be Pacific time, 2:15 to 2:30. Somewhere around that, depends on your questions. And we may be sooner if you've got no questions, whatever works, right? Would you enthusiastically rehire them? Well, if there's some not too sure about that, then maybe we need to have a chat with them, and maybe we need to coach them, and then maybe we need to free up their future and give them to someone else's accounting firm and let them be their problem. I believe you should only have A-class team members, and you are building a team. They're not called staff, right? Staff is a very derogatory term. They're a team. They're team members. And team stands for together, everyone achieves more. How do you build a team of people, a team that's working, that's really, really working well together? Well, I'm going to give you, this is the highlights tour, right? A lot more depth in the book, a lot more depth in our coaching, but this is the highlights tour. And so to give you something to think about, and by the slides will be provided, etc. We'll fix that error one that I've picked up before. Slides will be all provided. The highlights of building a team of people are as follows. First of all, do we have the right people today? It's very hard to build a team that works together if you've got some people who are not the right people. As Jim Collins said in his seminal book, Good to Great, the right people on the bus. Next piece, are they motivated? You don't need them to be running around and rah, 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 excited, but are they interested in change? Are they interested in doing the best for clients? Are they motivated themselves? You know, one of a great hiring technique is tell me about your sporting history. What sports have you played? None, not a sport person at all, right? But if they've played competition anything, they're motivated to win, right? Competition anything, motivated to win. Are your team motivated? Are they enthusiastic? Are they happy? Do they smile, right? You can teach skills, you can't teach attitude. Do they know what to do? Oh, but by the way, what happens if you've got a bunch of wrong people, bunch of idiots, and they're motivated? What have you got? Motivated idiots. Not a good look, right? Do they know what to do? Clear job instructions, clear project planning, don't know what to do today, no, know exactly what they have to do. Do they know how to do it? So just because they came from one of the large accounting firms to work for your firm doesn't mean they know how to do it at your place. So you got to build a team of people. Your training, your systems, your process needs to be one. We've got one way of doing it. Not 4 partners, 4 ways of doing everything, 15 people, 10 ways of doing everything. They know how to do it. And then lastly, do we have the right environment conducive to success? Environment includes themes. We're a big fan of themes. So building culture, environment, equipment, environment, behavior of other people, environment. Got the right people, motivated people, they know what to do, how to do it, and you've provided a great environment, you'll build a team of people. Chapter 5. It's all about fixing today. We've got things going on today. By the way, I've put a lot of thought into this. I started writing this in February. I started years ago, right? But in earnest in February. And I actually wrote the chapters in order. And so normally I looked at some other work and it wasn't in order. So I've put an order. I've put a bunch of new stuff in there that some of you have never seen before. Even if you know a lot of my content, there's a lot of new stuff in there as well, which works. And so these are in order of implementation. Fixing today. You've got to get better with what you've got, get efficient, and then scale. That sounds like 3 steps. Yes, it's 3 steps. It's pointless scaling, adding on, it's pointless. You're a $2 million firm, right? It's pointless buying $1 million firm if your shop is not fixed. It's pointless marketing your socks off to add 50 new clients this year if the current clients aren't served well. These are steps, but they happen at the same time, but you tune them up, tune them down as appropriate. This year, call it the next 12 months. What are we in August? Call it end of 26. I want you to fix these 8 things. Give you 8 big projects for, 14, 15 months. No, that's 16 months, right? 16 months. End of 26, fix these 8. These are the big things to fix. Number 1, pricing. Every job up front, or every client up front. Every client knows, or every client of every job knows the price before starting. No more pricing arrears if you still do that. You may still keep charge rates for the meantime, but pricing every job up front. There's pricing methods in the book, of course, but these are strategies, right? Next one, write-offs, discounting before billing. If you're doing that, you're just wasting money. We need to, write-offs are easy to fix, by the way. Just stop doing them. I kid you not. Value pricing. Learn how to value price and start value pricing work. Some things have no value or limited value, so you can't charge on value. Just pick a number, right? But other projects where you've got a material benefit to the client can be value priced in advance. Recurring revenue packaging. So you build a subscription business here. A subscription business where you're paid by the month. So fixed price could be on a project, could be by the month. Because you've always got special projects throughout the year, aim for at least 80% of your revenue as recurring revenue. Fixed price agreement by the month. So you build a subscription business and you work that out by the month for the known work, the known entities, add in tax planning, add in unlimited communication. Package it up, divide by 12, number. The vast majority of your revenue should be on number 4. Lockup reduction. Lockup. Work in progress, so work not billed, and accounts receivable, cash not collected. Get it to 0 or minus. If you move to a monthly recurring revenue model on the first day of the month, clients are charged, you'll end up with negative accounts receivable. But you've got to clean up what's there today. Client mix. Fix your client mix. Give the list to your team members and say, you can fire one client. Who do you want to fire? You've always got one. You might have 5, you might have 10, you might have 100. I don't know what you've got, right? But get rid of the client. You need an abundance mentality, by the way. An abundance mentality to achieve. There's so many clients out there to get. There's so many A-class clients out there to get. Your client service program, so your customer service program, different from point 8, which is your communication cadence, but what is the behavior that you have with your current clients to serve them? For example, one of our firms every Friday with their client excellence coordinator team sends a status update to every single client where they have work in progress. Well, this is where we're at with you. This is what we're waiting for from you. We're 63% of the way through, still aiming for the 15th of August, which is today. Service. What is your service program? Don't take clients for granted. Treat them appropriately. Communication cadence. So, by the way, in the book, I forgot to mention, no AI, no endorsements from other people either. Get endorsements. Our endorsements are live like this, with people saying it changed my life. I did this, did that, right? The case studies speak for themselves. But how do you communicate regularly with your clients? Not just customer service, separate, because that's the whole team, but what's the cadence of meetings? How often do you call them up? How often do you email them? Just randomly, right? How often do you text them? How often do you meet with them? What's your communication cadence? I give an ideal cadence in the book. Now, you'll notice for the keen eyes, point 9, it's only 8 points, doesn't say fix your workflow because I've got a whole chapter on that, right? Which is minimizing time. Minimizing time is all about workflow in your personal time, including 15 pages dedicated just to partner time. Partner time in the whole, run a better business, profits up, profit and time. So this gentleman, Cyril Northcote Parkinson, invented Parkinson's law. And he said, work expands as to fill the time available for its completion. You know that because you've experienced that, and that was 1958. My quote on this is that resources are consumed at the rate that resources are available. Money's a resource, time's a resource, office space is a resource, food's a resource. The more abundance of things you've got, the more you consume. Now that's great for clients because you want to consume and get more good, great clients. Awesome. But you need an abundance mentality. It's a resource. But if you've got working things in your office, you've got a spare, space, and you think, oh, I could fit 3 desks there. That's 3 people. How about you put a ping pong table there instead? And you might get more enjoyment and work out a better way for the people. So our objective here is to minimize time. Here are the 5 stages of workflow. We've got 25 steps around this. It's all in the book. But I want to give you the 5 key stages of workflow. Step 1 is preparation. Getting prepared before you start, like scheduling everything in advance. Scheduling all known work here in advance. Job setup. Collecting all the raw materials before you get started. These are the highlights, right? Doing the actual work and finding opportunities within the work. Number 4, going back to the client and selling additional services, explaining to what happened. And lastly, internal, do a debrief on the actual work that was done. 5 stages of workflow. Much, much more detail in the book. Let's talk about you and your personal time and how you delegate. Because partners, the work that you do should be the work that only you can do. Let me repeat that. The work that you do should be the work that only you can do. It's my book, right? It's my voice. I'll read the book to you. You can listen to it. It's work that only I can do. I'm running this webinar because it's my book. My offsider, Wendy Miller, runs webinars as well. I don't have to do that. But what do you, going back to the work that only you can do? There's a lot you can get off your plate. What I'm saying, there's a lot of stuff you do you shouldn't be doing. So who are you going to, or what do we delegate to? I've got 8 things or people to delegate to. We can delegate to technology, like ChatGPT, awesome, automation, record meetings on MeetGeeks, Fireflies, other apps, right? I did not, as I said, delegate this to ChatGPT. One by one, pop, 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 every single word. And there's no AI involved in this book, just RI, Rob Intelligence. No, that was a good one, right? Number 2, can you delegate to clients? Get them to take their own meeting notes. Get them to record their own meetings. Get them to keep their own files. Delegating to clients. Train your clients. Delegate to clients. Can you delegate to prospects? Don't do any research on them. As in, don't waste time researching a client. Get them to fill in a diagnostic before they meet with you, so you can learn really fast what they're doing. Get them to fill in, if you use Calendly like we use, questions before meeting. Don't accept all prospects. I'm not talking about clients. Don't accept all prospects. Of course you don't accept all clients. You can delegate to existing team members. They come to you with a piece of paper and say, Rob, how do I do this? Go back to them and say, well, how would you do it? Go back and think about it. Don't come to me with a question. Come to me with a solution. Use the deep end strategy. Throw them in the deep end. Come with solutions and questions. Push back on team. They come to you all the time. How do I do this? If you tell them how to do it, they become reliant on you. We're talking about minimizing your time dramatically. Delegate. Number five, sorry. To an assistant. Are you an assistant? Are you doing admin work? If you don't have an assistant, you are one. Is an assistant part-time? Is it a virtual assistant? In-person assistant? Who's your assistant? A lot of our firms use a really cool service. We've just started using it called Get Pineapple. Pineapple, people. $8 an hour. On-demand assistant. I've got an assistant. I've got a few assistants. One of them is for lifestyle matters. I've got two lifestyle assistants, just odd jobs. Tony, she charges by the second at $55 an hour. Kid you not, right? 55 Australian dollars per hour. Don't get her to read any of my work, right? It's crazy money, as in cheap. And she sends me a timesheet with this a bill, and it's got 5 hours and 56 seconds. Awesome! I'll pay the bill. No worries. Right, done. Are you an assistant? If you don't have an assistant, then you are one. Can you delegate to a better process? Under-engineer things. Kevin Bassett's online, I think. I gave Kevin we started coaching Kevin 7 years ago, Kev, in October. Wow. One of his first projects, he says, I've got this virtual CFO service, and we make about $500 an hour from it. And it's all fixed fee. I said, all right, one of your projects is to work out what you're going to take away and still keep the same quality. He did, and he did. Comes back and says, I now get $1,000 an hour for this. He's now at $2,000 an hour for that same service, but he took out things. You typically over-engineer things. I'm not talking under-engineer so the quality goes down. I mean, let's take away things so we can save time. Workflow, delegate to workflow. Delegate to systems documenting. Delegating to who or what? Delegate to Todd, team on demand. Maybe it's through Upwork. Maybe through freelance. These are sites. Get Magic, right? Expert 360, there's a job contractors sites. There's lots of these things floating around. I've got a lifestyle service called Quintessentially. Quintessentially are cool. I pay an annual subscription, and they organize cool stuff around the world for me. Whether it be restaurants, whether it be hard to get on golf courses, whether it be on experiences. My man Dominic, he pulls off all sorts of miracles around the world. Lifestyle things, tickets to this and that. Sold out concerts. Lady Gaga's sold out. We're going. The Formula One in Melbourne in a corporate box in March. Bucket list. Went. Right. Eiffel Tower at Laverne June. I think that's the pronunciation. Booked out. We got a table. Right. Etc. 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 Who are your team on demand? Number 8. Number 8 are new hires. Are these new hires onshore? Are they offshore? Are they local? Are they interstate? Where are they? There's many ways you can get things off your plate. Here's what you've got to do. There's 6 columns. I want you to think about this. And here's what they look like. First of all, think about what you do now. I've just got a random list of things you do today. You're doing these, maybe you're not John Geordie's, not because he doesn't work any time, he doesn't do any client work, but other things as well. What do you do today? Keep a log of your time, of exactly what you do. Then work out how much per month do I spend doing these things. It should add up to about 160 hours, give or take, doing whatever your list is. How much time per month? So list that in minutes or hours. Precisely what you do. Keep a timesheet of your day effectively, and say, okay, what am I doing here? Then ask yourself a question on the 3rd column. Could you delegate this? Yes or no? Could you delegate it to one of those 8? Will you delegate it? Yes or no? In column 4. Okay. Yes, I can delegate that, and I will delegate that. Number 5, who or what will you delegate that to? Name of person, technology, workflow, or one of the 8, right? Then work out, okay, how much new time will I save personally by doing that? Add them up, and then total new time per month when you delegate. Total new time. Back to our practice owner to business owner to investor, investor level is zero, right? Where you're not working in this business at all. You decide to what level you want to delegate. Maybe you like doing some client work. If you want to get to investor level, that's no client work. Maybe you realize, you know what, I'm just spending so much time, but as Gretchen said, EA is the best decision I made, to take all that admin work, take all those emails away from me, all that sort of stuff, gone. Maybe you need here's the thing, partners. You do a lot of things. You are a marketer, you're a salesperson, you're a firm administrator, you're a client relationship manager, you're a tax manager, you're a trainer. These are all part-time jobs. Is that why you're called partners? A business requires full-time jobs. You like that one? Part-time jobs, partners? Oh, that was a good one. I'm entertaining myself here, getting limited feedback from you guys. Give me some questions or comments or show me some love. Right, are you enjoying this? I like that. Yeah, thanks, Phil. Partners. Cool. A Fulner. Oh, Bill, very cool. So a partner, a Fulner. I like it, Phil. That's good. Thank you, Robert. You're enjoying this. That's funny. Exactly. So working out back to business by design, your numbers, and that could include your total worked time. My total worked time last year was 321 hours. Very proud of that, working in the business. But the objective is to get that to zero over time. When I started this business, this particular one 7 years ago, it was no more than 20% of the year actually worked. So no more than 73 total days worked in my business. And we're below that, which is great. You decide. Okay, chapter 7, scaling, growing. Here's where we're talking about top-line growth. And here's the thing about top-line growth. Profitable sales fixes everything. Profitable sales fixes everything. It's not just about sales, it's profitable sales. Profitable by average hourly rate by margin of the project or the client. So what do we need to do to drive top-line revenue? There are just three things. Three things to think about drives all top-line revenue. And then I've got a big, many more things for you. So number one is a database of prospects that you want to target. Number two is a brand. We've just done a full brand makeover, launched today. ProfitTime.co is the new website. ProfitTime Group is launched today. We're rebranding away from the Rob Nixon show. So we are becoming Profit Time. Book is called Profit and Time. I presume the website's alive. It was supposed to be alive today. Brand makeover, complete. Why? Because we're changing, we're focusing on one thing. We're focused on two things, profit and time. Activity, relentless activity. So what do I mean by this, right? So database objective, you build a database of prospects and suspects, a big accurate profile database of people you suspect might be a client of yours. The brand objective is to build confidence in the marketplace that we're the only choice. The brand objective. So writing a book is part of brand. We make no money on books, seriously. We give books away. It's 232 pages. It's a good book. It's an awesome book. But there's no money in books, right? That's all about confidence and brand. Oh, I've got a book. Awesome. And I'll build it like a coffee table book as well, so you can, keep it. Nice. And the font's not too big either. Activity. The activity objectives are to create marketing qualified leads and then follow up. So that could be an email activity, it could be a direct mail, a phone call, it could be a visit, whatever it is, right? 1, 2, and 3. If you're not hitting your sales numbers, your growth numbers, you're not hitting your mark, but you're doing lots of activity and the brand's good. So here you're in B, right? Activity is good, lots of activity, good brand, but the database is small. You won't hit your mark. What about if the database is big and the brand is awesome, but you're not doing much to fulfill getting leads? You won't hit your mark. What about database is big, tons of activity, running webinars and seminars and boardroom briefings, blah, blah, right? Database is big, activity is a lot, But when they go to visit you or speak with you, it's like looking at you from 10 years ago. There's no content that speaks to me. I don't have much confidence in these guys. The marketing may be good, but the branding is not. All three need to be aligned. So we want to grow this model, right? We want to grow this. That's the objective. We want to grow the top line, keep the costs in check. So thank you, Morgan. Difference between suspects and marketing qualified leads. A marketing qualified lead is the exact parameters of who you want as a client. So in our case, right, we in our coaching business, which is the business we've got, more than $1 million in revenue, 1 to 5 aligned partners, ambitious and coachable. So below $1 million in revenue, you are not a marketing qualified lead. So marketing may get you to be engaged with us, but you're not qualified to work with us. You're too big, too small, right? You don't want to change. A suspect is a big database who you suspect might be a marketing qualified lead. So for example, we've over the years had hundreds of small firms say, I'm at $700,000 in revenue. I want to get to $1 million so I can work with you. Awesome. They're not a marketing qualified lead yet, but they might be in 3 years' time. A suspect is who you suspect. A marketing qualified lead is perfect looking future fit client. So, got a gift for you. You're welcome. Hope that was good. Any questions? We'll answer. I've got a gift for you. So this gift is to show you, you can get this gift through the book. There's a copy in the book, but also you can get this full-size gift by clicking on the link that's in the book. And this is a really cool strategy map of what you can do to put in place to get growth and profitability. Lead generation, 72 different methods to generate leads. We call this the strategy map. Conversion rate, 74 different methods to convert marketing qualified leads, Morgan, into clients. Retention rate, 61 different methods to retain clients longer and have them refer more. Because you retain them through these strategies, they'll refer more. Average transaction value, 50 projects that you can implement to increase the price. Number of projects per client per year, 38 separate projects to get them to buy more from you. That'll drive the revenue, that equation that we went through. Gift. What about internal costs? Efficiency and expenses, 41 different methods to reduce expenses and be more efficient. This is about cash flow, right? Inventory work in progress, 40 different methods to turn inventory or work in progress around faster. Accounts receivable. Are you excited about this? You should be, right? I thought long and hard about putting this in or not, but everyone loves this, so we're giving away for free. In the book, you get a digital copy, right? Our coaching firms get a big poster of this, like a massive poster. Our coaching firms get a digital copy that they can use for their marketing purposes. We've got a firm in the Netherlands, going to visit them in a few weeks, that they had electrical contractors as their target. They put the whole thing in Dutch and changed the whole thing for electrical contractors, right? Pretty cool. 34 methods for accounts receivable. A total of 410 separate strategies. If you choose, entirely up to you, you can get this printed out, big poster, get it printed out at your local, wherever, and put it on the wall, and you can have your clients love you forever for this. You're welcome, right? Very cool. Thank you, Bill. Love it, love it, love it. The strategy map, all about business strategy, all about your strategy. 410. Cool. Brian, you're welcome. That was chapter 7. Chapter 8, leading with authority. So put a piece in here about leadership, how you lead. Where can we buy a hard copy of the book? Scott, you'll be notified. I literally got a small print run of a dozen yesterday here in Australia. We're getting a print run in the US over the next few weeks. And it'll be, Scott, where are you from? You from America? Where are you from, Scott? Just pop in there where you're from. There will be hard copies available, I reckon, in about 3 or 4, Utah, cool, Scott. So distribution center in the US. We'll notify you by email. Yeah, Bill, it's not even online yet. UK, John, it'll be shipped from the US. The district, Canada, Carl, very close to the US. No tariffs involved going your way, right? So, hard copy, literally, we've been pushing this to the wire. Digital copy you're getting now. It's not even on Amazon yet. You're getting Rowan Wood. I love Rowan Wood. One of my dear buddies. He's in my will. I gave you a hard copy yesterday, you bugger. You got the first one, right? We celebrated with a glass of wine and a beer. Cheeky bugger. I didn't know you were on. Hard copy soon. Be on Amazon soon. You'll get a digital copy initially. You're getting the highlights tour today. All right. Here's my quote about partners. When a partner is in command, Colin, I'm coming to see you as well, by the way. I've got to get a meeting with you, right? Favoritism. Oh, stop it, right? And Colin, I am bringing one with me. I might bring two just for you. I'll see how I go, right? When a partner is in command, they must take charge. They must take charge. So in taking charge as partners, who's in command, right? We've got a partnership. Who's the boss? Who's the CEO? Who's the managing partner? Who's the managing director? Whatever your term is. Partners need to make decisions. Someone might fly to Holland to get my free coffee. I'm not bringing a full box here, John. Let me concentrate. Bloody hell. Rowan, you started this. You need to make decisions. Someone's going to make decisions. To help you out, I've designed a decision-making matrix. And I got this idea from a company in the UK that was actually part of the British rowing team. And the British rowing team had a saying. They won gold in Sydney Olympics with this, right? Will it make the boat go faster? One question. Will this strategy make the boat go faster? Okay, we're going to get on the rowing machine for 2 hours tonight. Will that make the boat go faster? Yes, we're doing it. Hey, a few of the lads want to go to the pub for a couple of beers. Will that make the boat go faster? No, we're not doing it. So with this idea of will it make the boat go faster, I thought, okay, for an accounting firm to lead, what are the core things that you need to think about to decide whether you do this thing or not? So here's how this works. And I picked strategic direction, core values, team members, clients, revenue profit, average hourly rate, and profit time index. And make a decision, proceed, yes or no. So here's how it works. Instructions are, you put a tick in the box if yes, this idea has a positive effect on the outcome. You put a cross in the box if the idea will have a negative effect on the outcome. You put a neutral sign in the box if it will have a neutral effect on the outcome. And if you had any crosses, do not proceed. So you think about that and go, well, if you've got majority ticks, proceed. So yes, this one affects strategic direction, but it's against our core values. Neutral on team member. Will you do YouTube videos, top tips on how to implement each chapter? John, that's a good idea. Didn't think about that. Probably. Hope our marketing team are listening and they'll hold me accountable to that, right? That's a probably, John. It'll affect clients. It'll affect revenue. It won't affect profit, neutral on profit. Average hourly rate, yes. Profit time index, yeah. It goes against our core values. So that's a no. That's a no. What if, yep, direction's good with our core values, neutral on team members, doesn't really matter, but clients are going to be happy, revenue neutral, profits neutral, AHR's better, profit time index, yes, that looks pretty good project to do. That's a yes. And so on and so forth. How to implement talk to us. Yeah, thank you, Wendy. That's good work. Wendy's online here. Wendy and I are the coaches at the ProfitTime group. Much better than the Rob Nixon show. So, leading with authority. Let's go to chapter 9. Metrics that matter. Numbers, numbers, numbers. Now, this is chapter 9. You might want to go there first. And you might want to work out your numbers first, of course, as part of planning. But really, my quote on this is you can't operate a business effectively without knowing the right numbers. So the book is called Profit and Time, an accountant's guide to having it all. The outcome is one number. The outcome is called Profit Time Index. Of everything you implement, is this number improving? Here's the equation. Your Profit Time Index is your profit for the period, the month, before partner salaries, divided by the working, Kevin, exactly, divided by the working in hours by the partners. Working in hours is anything that looks like client work, admin, management, HR, IT, all those jobs, those part-time jobs as partners that you do that someone else could do if you had them around. On time, high-level business development, product development. So me writing a book took me 100 hours thereabouts. Me writing a book is on time. This webinar with 150 or 60 people, whatever it is leverage. It's on time. Me booking accommodation for myself is in time. Me running a team meeting is in time. Tasks that get leverage is on. So the objective here, work your number out, it'll be low, and then the objective is to improve your number. So if you're at 1, 0 to 250, you're overworked, underpaid. John from the UK, same thing in pounds, right? Pounds, dollars, doesn't matter. If you're here at number 2, 250 to 500, you start to make a little bit of money, but you're working too much. Number 3, 500 to 1,000. You might be making some money, but what about the time? 4, 1,000 to 1,500. Leverage has kicked in and it's going great. It's going great. But what happens here at 4 and 5, around the 2,000 mark, you start to get a bit comfortable. Don't get comfortable here because now it becomes a game. It becomes a game. Our objective now, can we double it from here without doubling the time? Keep pushing. There's more in you yet. And then once you get to 10,000, you don't have to worry about it anymore. $62,500 is the best result we've seen. 2-partner firm, husband and wife team in San Antonio, Texas. Their case studies in the book. When they started, they were in the hundreds of dollars. They completely changed their model. The partners don't do any time whatsoever. They sit in a management meeting and they don't do anything else. Now I got a text from one of the partners, the wife, Shannon. We're at $9 million now. When I started with them 7 years ago, they were $1 million in revenue, right? So not only have they grown their revenue and the profits, but the time as well. Profit Time Index. The second most important number is going to be average hourly rate. Client hours divided by revenue bill divided by client hours. Metrics that matter the most. Profit Time Index, average hourly rate. How do we drive average hourly rate? There are 3 things. I'll give you the guts of how we do this. 3 ways to do it. Number 1 is the top line price. You bump the price and you'll drive average hourly rate. Game changer. Thanks, Kevin. With a fixed price, you reduce the time with process, you drive average hourly rate, and you get more capacity. And then with product, you refill the capacity with a higher margin product. This is compound interest for an accounting firm. I'm about to show you what I mean by that. This is wild, right? Absolutely wild. Let's break it down to profit per client. Profit per client with this metric that matters. So here's what it looks like. The old way was the task took 28 hours to complete. We did an average hourly rate of $175 on a multiple people. That's what it worked out to be. Therefore, the price popped out the end at $4,900. Price at end, 4,900. So that's what the historical price was. Now what we're going to do, we're going to take one of those three, price, process, product, and just do price. We're going to bump the price by 20%. So this is compound interest. Watch what happens, right? 20% lift in price gives us $5,800, thereabouts. And we're going to repackage that into a monthly fixed fee. I'm just dealing with, whatever numbers you've got, just plug your numbers in, right? Second part of the equation, we're going to reduce the time by 20%. So price up by 20, time down by 20% with efficiency models, with workflow models, better technology. Now that works out to be 22 hours, 20%, up, down. Now our average hourly rate is $263. So we increased the average hourly rate by $92. No, it's not. That's $88. That's quite a percentage. What's that? That's 40%. Is that 40%? Yeah, call it 40%. We got a margin increase by 40%, but the price only went up by 20%, and the time went down by 20% to get a lift of 80%. That's pretty cool. But what if we then went and sold a new job? Let's call it $3,800 for a value-based fee project, a new project for $3,800. And we used those 6 hours that we saved earlier to complete that project. Average hourly rate on that one is now $633. Not all projects are priced or margin equal. So now we've got that project, line 2 is 263. New project is 630. Katie, you should have received, by the way, strategy maps in Tube. List of types of value-based fees. No, it does not, Katie. It's in a separate training program in the PTI Vault. So now the client value is $9,600. Same 28 hours. And now for this client, the average hourly rate is $342. We've doubled the average hourly rate for this client. Value-based fees, Nicholas, a value-based fee project, a project priced on value, not on doing time materials. So the client average hourly rate is doubled. And if we did that every single client, we double it in the firm, yet the price only went up by 20% because we put 3 factors in place. We had the price up, process, time down, new product, boom. And we do that over and over and over again. We price up front, we reduce the time, we sniff out another project, then we do it again. We price up front, we reduce the time, we sniff out another project, we sell the project based on value-based fees, and we do it again and again and again and again. And the profit from this client, the total profit is extra, is $4,700. $4,700. Thank you, Ron. Profit time index, average hourly rate. Sweet. Thank you, Bill. We measure average hourly rate by period, quarterly, monthly, weekly, by product, by invoice if we have to, right? This invoice is 2,000 and 10 hours, therefore $200. This invoice is 2,000 and 20 hours, therefore $100. What's the difference? Why? Right down to by invoice, by person. Some people are more efficient than others. At your weekly team meeting, average hourly rate by person. Let's do it. By client. Start with average hourly rate by client. All clients in the spreadsheet. Column A is client name. Column B is annual fee from that client. Column C is hours taken to deliver that fee. Column D is going to be B into C, and that'll give you the AHR per client. AHR for the business might be 175, but the spread is from 50 to 350. 175 is average. Do you know what they say about average? Average people, average numbers. Average is where the best of the worst meets the worst of the best. Another way of saying average is the cream of the crap. Average hourly rate, we need to drive that, and it should be increasing monthly. Monthly. Team, this is a journey that you're on. Glad you're enjoying this, right? The journey of profit and time. Your time, profit, and scalability is determined by your implementation, effectiveness, and speed. You go the pace you want. You may be completely happy with what you've got going on right now. Awesome. I'm going to love the book. And you might be a practice owner, right? Right now, grind it out. But you want something more. Flip the switch to be a business owner. Work more on it than in it. And then over time, fastest result, case study in the book, I've seen do this is 2.5 years. From 3,500 hours down the bottom to 121 hours in 2 years. And the case study, we filmed the case study this year, Shannon Stewart from Michigan, to get to investor level. 2.5 years. From 3,500 hours worked to 2 years later, 121 hours worked, from profit of 350 to profit of 2 mil. Crazy stuff to get to investor level. When you implement, you can expect, that is revenue, not profit. I'm going to fix these slides. Revenue increases, profit increases, and more importantly, time decreases. When you implement, you can transform your profit, transform your cash, transform your revenue, transform your team, transform your clients, transform your lifestyle. Yes, I know Vistage, Stephen. Transform your wealth and transform yourself. There's 3 components that you need to do this. You need accountability, you need to learn, you need to share. Today, and the book, is about content. You get a bit excited with some content, awesome, you start implementing, but with no accountability and no further learning and no sharing with other firms, it sort of peters off. That's what happens. When you've got coaching in place, pressure is kept on, and specifically our coaching, and you transform everything in your business. You've got a choice. Your choice from here. You could do nothing. Do nothing. You could do a little on your own. You'll get some improvement. Or if you really want to kick this into gear, with our help, our coaching and tools, you can transform every part of your business and make it last. Typically, we work with firms, the average is 30 months, 30. We work with firms for average 30 months, but the lessons, the structure, the foundations last a lifetime. So if you are, to tail this, if you want to fast charge this, you'll get a book anyway, but if you want to go faster than that, and if you're over $1 million in revenue now, if you're 1 to 5 aligned partners now, you're ambitious and you're coachable, then let's meet to see if we can help. Meeting details, I'll just pop those in there again. Thanks, Wendy. Wendy's online, but there she is. Click on that. Enjoy the book, folks. It's coming out on email today. Once we fix those few slides up, you'll get the slides today as well. You'll get the recording of today's webinar. Thank you, Wendy. It's awesome. It was a rush job to get it printed, but it's been 2 months of editing and things. So thank you for being online. Thank you for support, and looking forward to working with some of you and seeing some old faces on here. And see you soon, Colin. Absolutely right. I'll send you an email with the date. All right, guys. All the best. Thank you. Bye-bye.